Hi, I'm Vince Molinari, founder and CEO of FinTech TV, and you're watching Taking Stock.
Markets in positive territory on what is somehow impossibly the final trading day of Q3, and quite the market reversal we got here into the close here. High volume here in just the last few minutes, good enough to turn several of the major market indexes from negative territory on this trading Tuesday into positive territory. A comparable story for the S&P 500, the Dow, as well as the small caps. This is we are just about 8 hours and 1 minute or so away from a potential looming federal government shutdown that could be a lot of open question marks with regards to the release of key pieces of economic data in the days and weeks ahead. We will see how negotiations continue down on Capitol Hill, and all of the eyes of the broader financial markets will certainly be on what happens in Washington. A very special day here at the New York Stock Exchange. I'm going to bring in my friend Snowflake right here. They are here celebrating their 5th IPO. Welcome to the show and welcome to the New York Stock Exchange. It is great to have you here. Snowflake's going to join me here for a quick look at the leading sectors in the S&P 500. Healthcare off and roaring. We're going to talk healthcare stocks in just a bit. Industrials and staples, the key names in the Dow to keep your eyes on into the close. Merck, Amgen, and NVIDIA. Today on the show, the great Phil Rosen's on deck. We'll also be talking with the CMO of the one and only Snowflake. Here to do the honors. They are far louder than I am. Time now for the close. Thank you, Snowflake. With that, the team from Snowflake right back here at the trading floor of the New York Stock Exchange 5 days later in celebration of their IPO. And when I say celebration, I really do mean it. We'll give you a quick look at the tail of the tape here while we capture this amazing crowd reaction from the team at Snowflake. The S&P 500 into the close up 0.4%, quite the reversal late in the session. The Dow Jones Industrial Average, comparable story. Same for the NYSE Composite, and the small caps once again eking out 0.05% of a gain on the day. Let's bring in Phil Rosen. He is the co-founder and editor-in-chief. My man, would you mind standing on this side of Opening Bell Daily? But he joins us for the closing bell. My man, thank you for being here. Quite the enthusiastic crowd we got here today, but I'm grateful for you joining us as always.
Thank you for having me.
I want to talk first and foremost about September seasonality. Phil, I was long told this is supposed to be the weakest time of the year for equities. The markets had something else in mind, up about 3% or so for the month. What happened this year?
So you're right that it is actually the weakest time of the year. We talked about it last month. We were expecting September to be weaker because I think on average it loses about 0.7% every September dating back to 1950 or so. But you said we're up 3% on the month. That is totally ignoring historical trends, and there are a few reasons for that, right? We had earnings way stronger than expected. Everyone's still obsessed with AI. We had the Fed rate cut and expectations for more Fed rate cuts before the end of the year, right? And all this is going into a fourth quarter, which happens to be the strongest time of year for stocks. So I think it's something like 80% of the time, the fourth quarter finishes positive, right? Dating back to 1950. And then when September is positive going into the fourth quarter, that's actually very unusual. So I think we're going higher from here.
Of course, we always like to say past performance, no guarantee of future results, but history does rhyme, which is why we look at those historical comparisons. What else sets the stage for must-watch items for investors for Q4? We got not one, but 2 Fed meetings. I'm sure a lot of other things on your radar also.
Yeah, so the Fed rate cuts is going to drive more optimism in markets, right? Investors are expecting easier money as each month goes on. We'll probably get two cuts before Christmas. And then what we're going to be seeing is more focus on the jobs data, probably less focus on inflation data, because that is not going to be as big of a role for the Fed's calculus, right? They're going to be looking at, okay, how much is the job market weakening? And everything points to more rate cuts because there has been a lot further weakening.
Yeah, we got a potential federal government shutdown tonight. Some shutdown, some lapses in government spending. It could be a few hours, it could be a few weeks. Do we have any sense historically on what markets will be paying attention to in these crucial next few days?
Yeah, there's going to be a ton of political noise, I think, in the next days and weeks. But historically, markets do not really react that much to these government shutdowns, right? There's been a handful over the last few decades, and generally markets are muted to like maybe a daily or like very short-term reaction, right? I wouldn't expect any changes to long-term portfolio positions or anything like that.
Yeah, absolutely. Let me ask you about Friday's jobs report, if we get it, because we know the Bureau of Labor Statistics, if we do have a shutdown, maybe it doesn't give us that key piece of economic data, but assuming we do, what are you looking forward to get us kicked off in terms of that first key piece of data that tells us how the month of September actually was for the broader economy?
Yeah, I anticipate it's going to come in weaker than expected, right? It's we've been seeing continuing data show that the labor market is not what we thought it was. And that's been happening all year, dating back to last year when we got the revision. So I expect that trend to continue. And at this point also, because we're sort of expecting it, or many investors are expecting it, I don't think there's going to be that big of a market reaction to it either way, because everyone is so optimistic about rate cuts. That is what the focus is for the fourth quarter, and the fourth quarter is going to be very strong in my opinion. I'm expecting stocks to be higher from all the tailwinds that I mentioned.
Yeah, of course. Maybe some concerns about frothy valuations. We heard Jay Powell even rarely talk about that last week. Anything else that's top of mind? Could be any story in personal finance, the economy, or business you think we should be paying maybe a little bit more attention to, Phil Rosen?
Yeah, JD, that's a great point about the frothy valuations, right? So I've been writing about this quite a bit. These days, the companies that are driving the AI boom, they have less leverage than before, they have less debt than before compared to the dot-com era, and they need less labor supply than before. So there's a bunch of tailwinds to these companies that sort of justify these higher valuations. And I think it was Bank of America that said this might just be the new normal of this level of frothiness or high valuations, and remains to be seen. But I don't think that the AI momentum is slowing anytime soon.
Yeah, certainly not, but we'll certainly have you back very time soon. My man, Phil Rosen, thank you for being here for a very loud and enthused crowd from the team over at Snowflake. Grateful for your time as always. I'm going to hand you that. Howie, you and I are going to do our best right now to go for a walk. It's a packed crowd here, but we do have to talk about a few key pharmaceutical names on the day. Pardon us, folks. We're going to come right through with the live show. Thank you very much. Hi, Judy. Hi, everyone. What's going on? Time to talk about not one but two key New York Stock Exchange notable companies on the day, because we always like to give you an update on the sectors in the S&P 500 that are moving up and which ones have a bit of a sell-off. We've had that energy sell-off here on Wall Street the last few days. Look at this pop in shares for the healthcare sector. Howie, we're going to start with a look at ticker symbol PFE. That is Pfizer on the day after the president announcing its new drug pricing deal with the White House today with Pfizer, boosting healthcare stocks across the board. The stock is down about 7 to 8% so far year to date, but this is the largest one-day gain we've seen in Pfizer going back at least 3 years. Howie, on to the next one. We'll take a look at J&J, which also said, hey, we want in on the fun as well. J&J shares, Johnson & Johnson, up about 2% to a new 52-week high. Up 30% is J&J off of its April 8th lows, the second most weighted in the XLV ETF. And this is, of course, today's leading healthcare stocks. That is the name of the game here on Wall Street today. All right, folks, move along with the broadcast at this hour. Earlier this month, I caught up one-on-one with Patrick Shepard of Milgram Robotics to discuss all about the ways that they are revolutionizing the battlefield. Take a look. The battlefield of tomorrow won't just feature human soldiers. Autonomous systems are transforming how wars are fought, from unmanned ground vehicles to precision missile systems that can operate independently. Leading the charge of these game-changing technologies is Milgram Robotics. What are we standing in front of? Tell me all about the Havoc.
Yeah, so this is the first time she's ever been out in public. We have electric axles, and so we have instant torque, like a Tesla. So when you press the gas, there's no lag. And so we've designed this vehicle to be able to go approximately 70 kilometers an hour, both in forward and in reverse, because we have 8-wheel steering and we have an autonomy kit on both ends. I've never seen anything like that in my life. The idea being is she can come up out of a hide site, engage a target, and then quickly get back to hide from FPV threats, anti-tank missiles, anything like that.
Who are some of the other crucial partnerships, either on software or the hardware side, that are required to make something like the Havoc a reality?
Open architecture. So that's the reason we did it that way. So like if our customer wants to use Starlink, hey, here you go, we'll plug it in. Open architecture on the inside, open architecture with RCOS communication systems and situational awareness. One C2 system in UAE is not the same C2 system in the Netherlands. So we have to have that open architecture that allows us to be more flexible to our customers' requirements. Today, if you look at operations in Ukraine, there are no tanks, there are no APCs. All of these capital assets, full of people are unable to go and operate on the front lines. It's because they have no protection. So you take a vehicle like Havoc here today, you take the turret off, and we put a counter UAS system on top of this vehicle. And then with the autonomy kit that Milram has developed over the course of the last 10 years of existence, you would say, hey, here's 5 vehicles. Stay in the middle and protect them from threats above. And so with something like a 30 millimeter cannon, we can project force out to 15, 20 kilometers and protect those capital assets from the FPV threat at a really low cost per kill ratio.
But the Havoc is just one part of Milram's broader strategy. The company has also developed the Themis, a smaller but equally capable platform that's already being deployed in combat.
What we're demonstrating here is the ability and the flexibility of Themis to integrate any system. As long as it weighs 1,000 kilos or less, we're able to integrate local products, we're able to bring local industry into our baseline, and then we're going to take this system and we're going to offer it to Ukraine. In fact, there's a 100,000 euro bounty by the Russians on capturing one of our systems with the base station and with the controller.
Some of the tech specs that most stand out to you are personal favorites on this particular piece of machine.
Yeah, so Silent Watch. So we've been in Ukraine under our own investment for the last 18 months, and we've been working all the time with them trying to figure out what the best mix of gas versus electrical power is. And so we've tuned Themis to have enough Silent Watch mobility that we can turn the engine off, we operate at night, there's no thermal signature, and she can go up, pick people up, she can come back, and as soon as she's out of the threat environment, turn the engine on and continue on her way. We just did that mission a few weeks ago where the gentleman who got struck by an anti-personnel mine, he was stuck in a field, it was nighttime, it was too dangerous because of the FPV threats. So they turned the motor off, they sent her in, the guy crawled up into the basket, we brought him home, the guy survived, kept both of his legs. You know, like these are things that we see every day, and these are missions we're doing all the time.
Back at it, one and all. Welcome back to Taking Stock, live down here on the trading floor of the New York Stock Exchange. Give you a quick round of headlines with regards to the latest in the worlds of fintech, crypto, and AI. First up on this Trading Tuesday, taking a look at the crypto majors. Bitcoin down fractionally in the session, ETH down 1%, Solana down 2%. But as we've said, tomorrow's a new day for the crypto majors. Next up at this hour, CoreWeave striking a $14 billion deal, to supply Meta with AI computing power through 2031. And finally, Tether moving more than 8,000 Bitcoin worth about $1 billion directly into its reserve wallet, lifting its treasury to nearly 109,000 Bitcoin with a cool value at over $12 billion. Joining the broadcast now at this hour is Morgan Krupetsky. She is Vice President of On-Chain Finance at Ava Labs. Very excited to say she joins us now here on the trading floor of the NYSE. It's great to have you, and welcome back to the New York Stock Exchange, of course.
Great to be here. Thank you for having me.
Can we start first and foremost with an introduction, not just to the company, but to Avalanche specifically, and how you and the company and your colleagues are positioned in the ongoing crypto conversation?
Sure. So Ava Labs is the licensed service provider to the Avalanche Foundation. It produces a variety of different infrastructure and tooling products and services to really help drive forward the growth and adoption of the Avalanche network. Avalanche, like you mentioned, is a blockchain network. It's really a network of many customizable and natively interoperable networks. Each of these blockchains can be fully kind of customized and optimized for a whole host of different use cases and industries, from gaming to financial services to government and really everything in between. At the core of the Avalanche network is really the public permissionless liquidity hub, or the Avalanche C-chain, which houses all of the kind of key DeFi integrations, stablecoins, DeFi primitives, and other types of infrastructure that really makes a public permissionless ecosystem grow and thrive. I think in general, you can think about Avalanche as a faster and cheaper Ethereum. It is EVM compatible, transactions settle extremely fast, and they're extremely inexpensive.
How do you go about deciding which asset class or where to start for prioritizing what comes next for the general tokenization conversation? I feel like you are in such an exciting spot at such an exciting time.
Yes, so we've been focused on tokenization really from the beginning. Our stated mission has always been to digitize and tokenize the world's assets, so we've been focused on it for quite some time. I think over time we've seen a whole host of different banks, asset managers, FMIs, neobanks, and fintechs really enter the space, especially over the past year. I think really the quintessential tokenized asset, as the whole industry I think has realized, are stablecoins, right? At this point, there's over $280 billion in stablecoin market cap across different types of stablecoins across different networks. From there, we've seen a really large kind of emergence and interest in tokenized money market funds, which a lot of asset managers are and have been and continue to launch. And now we're seeing a lot more interest in private credit, which we can talk about, as well as tokenized equity. So we're really kind of seeing the gamut from uber liquid to more illiquid for various reasons, but tokenization and RWAs are not going away.
I'd like to think at this point our audience has at least a bit more of a familiarization with some of the stock and equity component, but let's talk a little bit more about private credit. I wanted to go there with the conversation anyway, and you perfectly teamed me up. What more should our viewers know?
So I think from a private credit standpoint, the private credit space and specifically asset-backed finance is just known to be one of the more kind of operationally onerous and cumbersome processes to really kind of make that whole sub-industry work. And it's really dominated at this point by, let's say, the top 10, kind of 15 or 20 alternative asset managers. And I think from a tokenization standpoint, what we're seeing is different types of emerging managers and smaller funds entering this space by really using this Web3 infrastructure. What do I mean by that? A combination of stablecoins, smart contract capabilities, and blockchain to really help to operationalize how asset-backed lending operates, how loans are verified, how funding is handled, and so really kind of help to upgrade the middle and back office processes and really enable smaller lenders to enter the space and participate.
What do you say are some of the most underrated risks to the general path of tokenization? I don't know if it's in the regulatory landscape or you're still in this world and ecosystem where the landscape, you're still trying to define what's a security, what's a commodity, what are the new age rules of the road. What are those risks and those potential headwinds as you see them? Yeah,
so I would have said probably this time last year, before that, from a regulatory standpoint, there were still a lot of question marks. And at this point, I think if you had asked us like last year, would we be here? I think no one would have guessed that, right? So the industry has made a lot of progress from a regulatory perspective. There's definitely a lot more regulatory clarity here, especially as it relates to especially stablecoins. So at this point, I think that's a little bit less of a concern, but I think overall smart contract risk continues to be top of mind for a lot of institutions, especially as they consider actually deploying a decent amount of capital on chain. But it's something that I think the industry and different types of partners are actively working on right now.
I hope you will come back to the show because the landscape, the conversation is changing just so subtly. You wait a few minutes, you get another big headline coming out of Capitol Hill. Members of Congress, they got their hands tied for the next few hours. Hopefully they keep the lights on for the federal government. But after that, we'll continue the conversation. Morgan, you're welcome back anytime. Thanks for being here today.
Thank you for having me.
Great to have you folks. Don't go anywhere. Much more Taking Stock coming up live from the NYSE right after this, including the latest on startups, raises, and rounds. And Money 2020's very own Scarlett Sieber does a Rocket Money deep dive. Don't go anywhere. Welcome back to the broadcast. At this hour, we'll bring you the latest in the worlds of startups, raises, and rounds on this Trading Tuesday. First up, AI chip maker Cerebras just raising $1.1 billion. At an $8 billion valuation, it adds Trump-linked 1789 capital to its roster of investors as it also eyes an IPO. Next up, the University of Phoenix making a Wall Street comeback, targeting a $1.2 billion valuation in its U.S. IPO at the, and I hope I'm pronouncing this correctly, the New York Stock Exchange. And finally at this hour, AI coding platform Vericel securing $300 million in new funding, lifting its valuation to $9.3 billion as it expands its AI cloud and developer tools. At this point of the show, time now for Money 2020's very own Scarlett Sieber. She now explains how Rocket Money actually makes money. Take a look.
Welcome back. I am Scarlett Sieber with Money 2020, and on today's How Do FinTech Companies Actually Make Money, we're going to be breaking down Rocket, aka RKT, on the New York Stock Exchange. You probably know them as Rocket Mortgage, not just Rocket. They're the Super Bowl ad kings, the people who convinced America that getting a 30-year fixed mortgage should be as easy as ordering a pizza on your phone, except instead of a moment on the lips and a lifetime on the hips, it's 6.8% interest for 30 years, people. So how does this financial technology behemoth make money? They don't do it the way a traditional bank would. They don't just make money on net interest margin per se, taking deposits and lending them back out. They're more like the mortgage world's middlemen, except with better branding and cutting-edge technology. Step one, they underwrite and originate your mortgage. You pay them an origination fee, usually around 0.5 to 1% of the loan. On a $300,000 house, that's $3 grand right there before you've even unpacked your moving boxes. Number two, they don't just sit on your loan, they package it and sell it into the secondary market. Fannie Mae, Freddie Mac, the big banks, whoever's buying, Rocket gets the cash back quickly so they can make more loans. It's like mortgage flipping. You know that kind of broke yet entrepreneurial friend that you have who borrows your credit card to buy Taylor Swift tickets, sells them on StubHub for a markup, and then pays you back? It's kind of like that. It works, but it requires incredible scale and trust that the system keeps spinning in a profitable way. And let's talk about profitability for a second, people. In 2020, when the interest rates fell, Rocket did nearly $320 billion in mortgages in a single year. Want to know the profit on that? $9 billion. What's the secret sauce? Well, it's really about technology and marketing. Rocket spends over $1 billion a year in marketing alone. You can't watch an NFL game without hearing push button, get another mortgage. So let's just talk about this really quick. How do they make money again? Origination fees up front, servicing fees while they hold the loan, and by selling mortgages into the secondary market, turning boring debt into tradable assets. Rocket isn't a bank. It's a high-tech toll booth on the highway to the American dream that we all want to be on. And with that, back over to you.
All right, one and all, welcome back to the broadcast. At this hour, I'm very excited to say every guest we interview I love talking to, but especially when the guest just rang the one and only closing bell right here at the New York Stock Exchange. Denise Pearson joins us now. She is Chief Marketing Officer at the one and only Snowflake. Thank you for being here, and congratulations on a huge day back at the NYSE. It's great to have you.
Thank you so much. It's so awesome to be back here 5 years later. We're here to celebrate our 5-year IPO anniversary today. Back then, we were all sitting in our homes in yoga pants. It was during COVID, so it's truly special to be back here, in person.
Can you tell me a bit about what the experience as a publicly traded company has meant to you and Snowflake the last 5 years? And then what is it like to be back here doing the closing bell ceremonies back at the exchange?
Going public, it's a huge milestone, but it's most important what you're building, after your IPO, and that's why it's so special to be here 5 years later. At that time, when we did our IPO, we had done 130 million a quarter, and now we just recently crossed over $1 billion a quarter. So it's more special to be here and really celebrate. We have many of our old customers from the early days, new customers, the whole partner ecosystem. A lot of snowflakes here today, but also the entire community here. We've been handing out over 1,000 ice creams here today to celebrate.
That's, of course, arguably one of the most important parts of the day. Plus, your mascot was here as well. We always love seeing Snowflake the bear. The stock is up more than 40% year to date. It's impossible to go very far talking about the financial markets without mentioning the prowess and power of this company. You look back at the last 5 years, what have been some of those highlights that most stand out to you since your IPO?
It's really all about helping our customers unlock the full value of their data. And also today, right, it's all about AI moving forward. Those companies that are succeeding now with their AI strategies are those who already have a data strategy in place. So what we're seeing right now, Snowflake's 12,000 customers, those are really the companies that are succeeding now with their AI strategies because they have all their data in order for this AI revolution that is coming.
Yeah, and I know that the 2025 Snowflake Challenge is something that's a top priority to you in the company. What more should people know about where the company is right now, and especially as you turn the page here to Q4, which officially kicks off here on Wall Street tomorrow?
Yeah, Q4 is kicking off soon. We have some pretty big announcements coming up in November. Think about you being able to talk to all your data, all your information in your company. That's what's coming in November.
What most excites you about where the company is right now, and what gives you confidence Snowflake is the industry leader that I know you know it is as you head over into 2026 for a very crowded space with lots of competition?
Yeah, one thing that is truly special with Snowflake is it's incredibly easy to use. So customers are seeing the value much quicker than any other product. And at the end of the day, it's really all about the business value and the business outcomes, right, that you get from technology. So we're excited about that. We're also excited about the network effects around the Snowflake platform. If you're on a Snowflake, if you're Snowflake customers, you can share your data securely with any other company in the Snowflake ecosystem. So you're really seeing this big network effects that are happening. It's already happening across financial services. We're also seeing that happening now in the healthcare industry and the manufacturing industry as well.
Yeah, of course, you and I are doing this conversation live right here at the corner of Broad and Wall, but the Silicon Valley AI Hub is, I know, a top priority for the company. What other initiatives do you have that you would most want people to know about?
Yeah, again, Silicon Valley AI Hub we opened last week, and it's truly an event center and a community space for the entire AI community to come together. When we now talk to enterprises, their biggest challenges when it comes to realizing their AI visions is not about technology. It's really all about upskilling the workforce. So that's something we're actively involved with as well.
That's amazing. Well, I'm very grateful that you're able to join us, not just on the show, but able to come back to the trading floor of the New York Stock Exchange. Much better to do this here in person than where we all were 5 years ago.
I think you'd agree. Yeah, thank you so much.
Of course,
thanks.
Congratulations to you and the team at Snowflake, and thanks a lot for taking the time to join us today. Folks, that's going to do it for today's edition of Taking Stock live from the trading floor of the New York Stock Exchange. We've got ADP private payrolls crossing the wire tomorrow morning, plus the latest from ISM Manufacturing. We'll be bringing you on tomorrow's show everything you need to know about Nike's third quarter earnings. Tomorrow morning, 9 a.m., NYSE TV Live, plus FinTech TV, both count you down to the open. That's going to do it. Special thanks to the amazing team from Snowflake. We'll see you tomorrow for a whole new show. Woo!